Good morning, good afternoon, good evening, everybody. Welcome to the pre-market show. We have James DeGaris from Macro Markets Group. James, how are you today?
I'm doing very well. It's obviously a blistering heat in the UK at the
Yes.
moment, so we're sat at a desk with a fan blowing full power. But I'd much rather be in Bermuda where you are.
Yeah, I don't blame you. I don't blame you at all. I think it's hot here as well, but maybe not as hot as the UK. I actually left the UK to get away from the heat, if you can imagine.
Yeah, we
So we
can't
do have,
complain though.
yeah, we can't. We can't. We have a lot of things to be thankful for. I'm going to hand it over to you to prep for this slew of data that we have coming up any second. You want to give everybody a bit of a heads up in the
Yeah,
next
we
minute?
just got under 2 minutes to go until we get a bit of a raft of data from the US. We've got obviously the weekly initial jobless claims forecasted at 225,000. We've also got the GDP quarter on quarter for Q1 data forecasted at 1.6%. The previous data was 0.5. And we lastly have the core PCE price index data, which year on year is expected at 3.4% and month on month at 0.3%. Obviously, just over a minute to go for the European session. It's a bit of a steadier session. The markets were kind of waiting on the Wall Street open now, I believe. After last night, we had really good earnings from Micron. They blew expectations out of the water.
Yeah.
Obviously, they're a memory chip maker, and the shares are up 16% in pre-market and look set to top the record high.
1 minute ago now, leading with the US PC price index year on year.
As you can hear, the data is coming out very soon, but obviously this has set the mood for equities last night with the Asian shares surging and the Nikkei was up just under 5%, and it's been a positive mood in Europe this morning as well. So obviously the US futures are benefiting off that, and the tech shares are leading the charge. Nasdaq up around 2% pre-market. In other markets, oil prices are still a little lower. Crude's dropped just under 1% and back to pre-war levels, and the dollar is still doing well, really following obviously last week's FOMC decision and press conference with the new Fed chairman, Kevin Warsh, and we're expecting a rate hike in September. But we are pretty much seconds out, less than 10 seconds to go until the data, and we'll see it pop up on the screen. And you should be able to hear it as well.
Just waiting on the PC data. 4.1%, 4.1% as expected. Core PC price next year on year, 3.4%, 3.4% as expected. Core PC price next month on month, 0.3%, 0.3% as expected. And PC price next month on month, 0.4%, 0.4%, lower than the forecast of 0.5%. US GDP quarter on quarter final, 2.1%, 2.1%, higher than the forecast of 1.6%. Keep an eye on the markets. Dixie seeing some movement towards the downside, S&P 500 movement towards the upside. US consumer spending month to month, 0.7%, 0.7%, higher than the forecast of 0.6%. US GDP price index, 3.6%, higher than the forecast of 3.5%. Personal income month to month, 0.7%, higher than the forecast of 0.4%. US real personal consumption month to month, 0.3%, higher than the forecast of 0.2%. GDP deflator seasonally adjusted final, 3.6%. Core durable goods, 1.3%, higher than the forecast of 0.6%. Core PC prices final, 4.4% as expected. Continued jobless claims, 1.821 million, 1.821 million, higher than the forecast of 1.8015 million. PC prices final, 4.6%. Chicago National Activity Index minus 0.1% compared to the forecast of 0.15. Initial jobless claims, 215k, lower than the forecast of 225k.
So raft of data there.
Seeing some revisions.
Obviously, a lot of the PCE data was mainly in line, or the core was anyway, which was the more important data. But for GDP come out at 2.1%, which was higher than obviously the forecast and the previous data, and the weekly jobless claims come out at 215, which is a little lower than forecast. But obviously GDP data better, and the initial market movement off the back of that, we've seen a little spike lower in the dollar and a little spike higher across the board in indices, obviously helping their gains. And as you can see, the Nasdaq is still obviously creeping up, and it's looking towards that 30,000 mark, the Nasdaq. But there's your data from the US, mainly obviously the GDP with a better beat than forecast, and the weekly jobless claims slightly lower than the forecast.
That was a lot. That was a lot to digest. But like you said, looks like the initial reaction was kind of risk on-ish. And it looks like it's fading just a bit. I'll have up the top left ES. So ES popped over towards the highs of the pre-market. Same with Bitcoin as well, which is usually a good indicator of risk on. Dollar down, as you said, and then crude more or less unchanged after that slew of data came out. Interesting stuff. I do like the squawk. I think later on we should talk a little bit about the terminal and how folks can get access to the squawk themselves on their desk.
Definitely. But I think really for the afternoon, a lot of the focus will still be on obviously the indices, especially after Micron's good earnings yesterday. But obviously there is still probably a little bit of concern in indices with the Fed. I think for now the kind of AI revolution will still take control and is obviously still dominating risk sentiment. But obviously the Fed tightening does kind of cap the upside, I think, in indices.
Yeah, I think you're right, and I think that that new Fed, the new sheriff in town, really stamping his own sort of authority and wanting to shake things up and show that he is not Jerome Powell. And in many ways, I think we're going to see in the next few weeks, especially how bonds react to that, and also how equities react to that. I've just pulled up Micron because that's the overnight news, up close to 18% in pre-market, as you said. So this could be carrying us into the open. Very big name, very big tech name, and we saw overnight Nasdaq also higher by about 2% going into the open today. So that's what I'm going to be watching. I didn't actually trade it. I was traveling yesterday, and the prices were very, very expensive. I think the market knew that it was going to be a big swing after Micron earnings. So I have a few mates that did get in yesterday in Micron, but yeah, it was a monster move, absolutely. So just really quickly for everybody, I just wanted to remind everybody that we do have a prize giveaway. We'll put the QR code in the top left for anyone who would like to enter. There's also the link in the live chat. So head over to YouTube or you can go over to our X channel and see our live link for the prize giveaway. It's going to be for a $5,000 account, courtesy of our sponsors, City Traders Imperium. So if you win that doc race, you'll get an account with your name on it. And then lastly, before we carry on, I just wanted to remind everybody to please comment. We are live, so this is not pre-recorded. We actually do have James DeGaris. It is not AI. He is back from his holiday. He is in the flesh. So if you have any comments or questions, please don't hesitate to pop them in the live chat and we'll get over to them as soon as possible. So what are you looking at today, James? What's the story? I know we touched on a few things after the data. You know what I forgot? I think we should probably just run through the intro real quick. Let's do the intro and then we'll come back in about 30 seconds.
Cool.
All right, be right back. Don't go anywhere. We'll be back with James DeGaris of Macro Markets Group. I wanted to do a fun poll for today. Let's try it out. Do you think Nasdaq is going to finish green or red today? What do you think? If you had to pick right now, James, what would
I feel
you
like
pick?
I'm in the casino putting my money on red or black at the roulette table. But if I had to go all in on one, I'd probably say green. I think we could have a little bit of a positive day in the markets today. Really, just off obviously the back of them, the earnings from last night and the risk on sentiment that we're obviously seeing off the back of the earnings, and then throughout Asia and throughout the European session as well. I think in the last kind of week or so, obviously we're talking about obviously Nasdaq in particular here. We kind of had our bit of a pullback, about 5-6% or so, really, like over the last week or so, and then yesterday obviously found its feet a little bit. So I think we'll probably try and continue that trend now. And I reckon, I mean, it's Thursday, so I'd like to say in the coming days, but obviously we've only got a couple more days of the trading week. But I reckon by this time next week, when you're doing the pre-market show again next Thursday, we could potentially be seeing Nasdaq at all-time highs again. If I had to place my chips somewhere, so I'd be saying green.
Yeah, we're not too far from the all-time highs. You're right about that. And the 5% pullback, it wasn't really that much panic. I felt like it was, it was very organized, very sort of.
Yeah, it was staggered, but obviously in terms of I guess bigger picture, if you've got a 5% pullback, 10% a correction, 20% a bear market type thing, dropping 5% in a kind of staggered move like that over the week there, you can see like on the kind of daily time frames, you obviously had that initial drop and then kind of reclaimed it, and then again had that kind of second move lower around there, obviously to the lows, about 5-6% or so. That's enough for investors to kind of want to get back involved, and probably want to get back in and try and push NAS and the other indices to all-time highs. And I think Micron last night is probably the catalyst for that, to bring that bit of optimism back.
Yeah, I think there's very little, I think, stopping us here. So like you said, give it another week and we could head higher. Looks like we have a few votes coming in. So in the live chat, the way to vote is you type 1 for green if you think the Nasdaq's going to finish today green. Type 2 if you think the Nasdaq's going to finish red. Please don't put green or red. The algorithm only looks for a number. So just 1 and hit enter, or 2, hit enter. And let's see how people are positioned. I think you're right. I think after last night, it seems like there's definitely a newfound bid, a newfound bullishness, and bulls are looking to kind of scoop up this little 5%, 6% that we've seen recently.
I mean, just as a fundamental overview for the S&P, but obviously, ties into the Nasdaq, if not even more bullish for the Nasdaq because obviously the tech dominance. But this article explains it pretty well, obviously just pulling it from the news feed on the terminal, and just saying that the S&P 500 remains under pressure as the Fed tightening risk caps the upside, and that data will be in focus as a fundamental overview. Obviously, the S&P and the other indices, like we've just shown, had that bit of a staggered pullback last week, and that was really since the FOMC meeting. Obviously, the Fed delivered a bit of a hawkish surprise through the dot plot. Now, for those that don't know, the Fed do their interest rate decision every 6 weeks, like all of the central banks, every 6 weeks. But the dot plot happens every 12 weeks, so every other meeting. And it's simply a chart where all of the members of the Fed put a dot on where they think interest rates will be. So you've got like interest rates on one axis, the year on the other, and they'll put a dot on where they think interest rates will be at certain points over this year and next year and 2028, etc. And the median dot plot showed one rate hike this year, and some of those hawkish members penciled in multiple hikes. But the consensus, the expectation, was looking for no cuts or hikes this year. So obviously with Fed members saying, we think we could cut at least once this year, but maybe twice, versus the expectation that was no decisions, it was a hawkish surprise. And by projecting a rate hike, the Fed effectively adopted a tightening bias in the short term. And that obviously caused the market participants to increase their rate hike bets immediately, with now 36 basis points, which is 0.36% of tightening priced in by the year end. And there's a 34% chance of a hike in July, but a 68% probability of a hike in September. So it will most likely obviously be September. And the signal is that the Fed is finally looking to deliver on its price stability mandate and bring inflation back to the 2% target that it's been missing since 2021, when we got the massive inflation spike after all of the quantitative easing that we got after COVID. And if the data says they need to hike, they will, which is a change, obviously, from what Powell had been saying over the last months and even last couple of years. So new Fed chair in, he's not mucking about. Do you know what I mean? He seemed pretty confident in his opinion, and they've obviously changed their stance. And with the Fed's tightening bias, it's going to be harder for the stock market to rally as hard as it did in the past 2 months. And we kind of spoke about that at different times. I've been on the calls in the last couple of months. It's from that April low, which is around April the 7th, I think it was this year, April the 9th last year, seasonality wise, April, May, very good time obviously for the stock market. But it will be harder for it to rally as hard as it did in the last couple of months now, as the risk reward is skewed to the downside. So prices could stay in a bit of a wide range, and probably a worst case scenario over the next, say, 6 months, if you like towards the end of the year. I'd say a worst case scenario would be coming back to the start of the year levels, like January 2026 levels. But we'll obviously have to wait and see about that. That's a pretty big call. But for some decent bullish momentum, the S&P will just need soft US data in the next few weeks. And what that will do is will trigger a dovish repricing for interest rates. And obviously that would push interest rate yields or bond yields lower, and it'd push the US dollar lower as well. And that effectively eases financial conditions in the short term. And that way, obviously, you could get more bulls come into the stock market. So we've had an incredible rally over the last couple of months. Obviously, it's been fueled by, I'd like to say peace deals with the war, but it seems like a peace deal still hasn't been solidified. You get murmurs about it, and obviously it still doesn't come to fruition, but the optimism obviously has definitely changed in the last couple of months. But I think it'll be interesting to see how that maintains going forward, especially over the summer and towards September. And obviously, will the data solidify that we're gonna raise rates in September, and the September meeting will have a dot plot as well. So if they do raise rates in September and then they turn around and say, we're going to probably continue to raise rates a couple of times, this will really depend on the inflation data, which a big component of that will come back to the oil prices and kind of obviously how oil's affected inflation. And we know oil's obviously dropped a lot now over the last few weeks due to some sort of peace deal kind of coming to fruition with the war. But that will be obviously what the Fed are focusing on. That's exactly what Kevin Walsh said, that they're looking to deliver on price stability mandate and they want to bring inflation back to the target. So over the summer, the inflation data is going to be a massive, massive focus leading into, I guess, Q3, Q4 this year for interest rate decisions.
Yeah. And I think this is it's all to play for here, and also add in, I guess, the seasonality and the fact that summer times usually see a little bit, usually historically a little bit less liquidity or lower levels of volume going into the summer months. So it could be interesting. We could get a lot of volatility if people aren't prepared for any sort of upside surprises or rate hikes, which I think we're looking to get at least two, or definitely one, maybe two, as of right now. So I think it's going to be an interesting next few weeks, James. I don't know about you, but you got to get your seatbelt strapped on. Should be fun.
Yeah, and I think the only other kind of dark cloud looming over the markets that has had a little bit of attention but still I personally don't think is being spoken about enough. But I guarantee that if you're on Wall Street or if you work in a financial institution, you'd be a little bit concerned about it, is the dollar yen. And that's because the dollar yen has obviously continued to surge off the back of this recent dollar strength. And we're now at a level in the dollar yen that hasn't been seen since 1986. And it's a very, very complex topic, the dollar yen and the Bank of Japan, and it takes a lot of research. And I mean, I can talk forever, as obviously the viewers probably know, but I think if I was to speak about the Bank of Japan, it'd probably have to be a 3-day webinar. But we are at levels not seen since 1986. We've had a massive break kind of past this like 160 level, and the reason it becomes like very dangerous is obviously you start to get intervention into the markets from the Bank of Japan. So we did see it on the 30th of April, and we saw a little kind of glimmer of it on the 11th of June. But the dollar yen for me is one that I've been watching very, very closely. And obviously with this hawkish repricing in the rate expectations, the dollar has obviously rallied loads. But we have seen these kind of very quick spikes in dollar yen, and this is because the Bank of Japan are intervening in their own currency and basically in a way manipulating the price of the dollar yen by forcing the yen to get stronger. It's very complex, but they through their bonds they buy loads of yen to push the price down, but it obviously just doesn't sustain. But for me, this is one of the key things I'm watching, because those that have kind of tracked the Bank of Japan like over the last few years would maybe remember that in 2024 the Bank of Japan intervened, and it kind of led on to trigger what was a flash crash in the dollar, and there was massive strength in the yen, but it also triggered a bit of a global like market crash. Around that time, I think the Nikkei had the worst days it had in about 20 years, and the Nikkei had dropped 25-30% over that time, and the S&P also had a bad stint as well, and had dropped quite a bit. This was around July, like August 2024. So it's something that I'm closely watching. It affects all markets, although it doesn't seem like it should or it would. It affects all markets just because they have to kind of cover themselves. And with the Bank of Japan raising interest rates, they're now at 1%. And with the dollar yen breaking through these levels, if they have to intervene, which they've already tried to do, but obviously it's not sustained and the dollar is too strong with this hawkish repricing in rates. But if the Bank of Japan do have to step in stronger and really force the price of the dollar yen down, it could trigger good, strong selling that could sustain over days, if not weeks, in the indices. So it's something to be aware of. It takes a little bit of time to play out potentially, but it's something that when we're speaking about, could there be a bit of downward pressure on the S&P over summer, that's something that you'd have to be aware of. And obviously 2 years ago it happened at the end of July, start of August. We're coming around to that kind of time in 5-6 weeks, so it's just something to be aware of, I think, in the back of your mind.
Yeah, I like the dollar yen. I've been watching it and watching it and watching it. I tried to pull it up as you were talking, and you can see it's just creeping up closer and closer to that that high just above is at about 162. One thing I saw yesterday, early yesterday was, or this morning, Japan's 20-year bond auction saw the weakest demand since May per Bloomberg. So basically a weak bond sale comes after worries the Bank of Japan is not hiking fast enough. So I think maybe this is the dark horse. Maybe not many people are focusing on this. It's not the AI story directly. It's not as sexy, but I feel like those things that are least monitored are the ones that usually end up being the big surprises. So you've heard it here first, boys and girls. Keep an eye on, even if you just trade, indexes, or you just trade equities. Please do not sleep on the yen here, because I think there was also a call between the Bank of Japan and U.S. Secretary Bessent earlier this week. So I feel like intervention is going to happen any day now. So let's see how that impacts the wider market. Like you said, it has in the past caused carry trade shocks and some what do we call them? Flash crashes is a word that we haven't heard lately.
Flash crashes is exactly that. And they're the kind of days where people sit there and they're like, why is the market going down? Why is the stock market dropping? And like I said, at the start of August in 2024, I think the S&P over a 2-3 day span had done about 10-15% lower. Like I said, the Nikkei was about 25-30%. And it's Armageddon on days like that. You know what I mean? When the market's dropping 5% day after day after day. And it's just understanding something we've spoke about so many times in terms of correlations. If you only trade one market because that works for you, that's absolutely fine. You have to do what works for you. If that only market you trade is gold or pound dollar or S&P or whatever it may be, that's absolutely fine. There is no right or wrong answer in this industry. But I've always kind of traded what I call the right contract or the right asset for the right opportunity. So I would say that gold, for example, now in the last couple of weeks, it seems to be moving a little bit more. And obviously we've had a little bit of a sell-off due to the dollar gaining strength. But really, for the last couple of months, I'd say gold has been a pretty boring asset to trade. It kind of moved sideways. Yeah, it's still a decent enough range. And if you can trade that range, then fair play and well done to you. But considering the geopolitical tensions, it didn't really do much at all, and it's about just, obviously some people trade one market, that's fine. If you trade multiple markets, it's about knowing where's going to be the best opportunity in certain markets. And if you only trade one market, I'd say you can't be naive and not care about any of the other markets. If you trade euro pound, you only trade euro sterling, you still need to know what's going on with the dollar, because the dollar is affecting the euro and it's affecting the pound, so it's just about understanding like correlations. And again, we spoke about these correlations with the yields and the dollar and oil and gold throughout the war over the last few months. And maybe that correlation that we're speaking about in upcoming months is how the Bank of Japan and the Japanese yen affects the dollar yen, which affects S&P and would affect gold and will affect other markets. And this is, I guess, the reason you could kind of stem this back to is think about the psychology of institutions. People speak about institutions and institutional trading a lot and stuff. If you work at an institution, you're going to be in the bond department or the equity department or the FX department or whatever it may be. But if one day there's a shitstorm going on in FX, I can guarantee you the boss of the equity department will come in and say, I was about to use bad language, but I don't want to swear and stuff, but they would come in and go, there's a shitstorm going on in Japan, sell your equity positions today. And they're going, well, what about this AI news? And he goes, I don't care. We're offloading some of our stocks, and that's kind of the psychology behind it, So it's just about understanding correlations between different markets sometimes and how they all kind of tie into each other around the macro, bigger picture.
Yeah, I think that's important as well. Sometimes, like trading alone, you can get into this sort of siloed place, but you need to know what's coming next. And a lot of times, these sort of things, like the yen, for example, could be that canary in the coal mine. It could be that warning sign that kind of tells you, okay, either cash in some of the position, go to cash, or maybe I need to readjust the portfolio. It's all about, I think, information gathering. And the more you know, the better you're able to grow your account. And that's a perfect point to say within a large institution, you're going to have various heads of departments communicating on a daily basis, especially for something that's going to be like a monumental impact across the market. I do want to quickly just get the duck race started, so I'm going to just say a thank you to everybody who is watching. We have a very busy live chat at the moment, and we're going to run the duck race. So without further ado, let's put the duck race up here, and we'll say good luck to everybody who has entered. Do you want to pick a number from 1 to 13?
What for?
For the duck race, which duck do you think is going to win today?
I'll go with my lucky number 11.
Okay, number 11. Here we go. All right, number 11.
I know that if they win, it'll be the hardest name to pronounce. It always happens to me.
It always is. I'll give it a go, though. Here we go. So the winner of this account will get a $5,000 CTI, which is the City Traders Imperium account. So we do want to say a thank you to everybody who has entered today. You said number 11. Looks like that's Terry Too Cool.
And what we'll do as well, as I always normally do, obviously, when I'm on here, is whoever wins this duck race, they'll obviously get the $5,000 funded account from CTI, but I'll give them a month's free access to the terminal. So whoever wins the duck race, they're going to reach out to Mandela to obviously claim their funded account, and they can either through Mandela contact us or email info@macromarketsgroup.com, and I'll send you a private link to claim your month's free trial on the Macro Markets Group terminal as well. So you can use that alongside your funded account, and hopefully it helps you hit target and get paid out.
Brilliant. Thank you very much for giving that as well. So a very big prize to everybody who is up for the running today. Thank you very much. We'll speak about the terminal, I think, in a little bit more detail if we can. Maybe get a little bit of a demo going after the race is finished, if you're up for that, James.
Yeah, I'll quickly show the winner, obviously, what they're about to receive, and I guess anyone else like viewing as well. Who's in the front running here?
Yeah, this is the final stretch. Number 9.
Number 4?
Yeah, number 4 looks like the UK, one of those guardsmen. Let's see.
Yeah.
Number 11, I think, is Terry Too Cool with the crown on. That was your pick there. We got 10 seconds left on the clock. Also, just ask the person who does win to let us know how your account management goes as well. So the winner is here we go.
Late flyer. Waris Armani.
Very well done. Yeah, let's give him a round of applause. Actually, very well done. Congratulations on winning. I have one of these things. My mom has 4 grandsons. So there we go. Well done. Congratulations. Congratulations on winning. So, do you want to let Waris know, because that was pronounced so perfectly, what they will win as a result of the terminal?
Yeah, I'll quickly go through it on the screen share. I know we're obviously getting close to the US Open here, so I won't go into too much detail, but this is the Macro Markets Group terminal. Congratulations, Waris. Obviously, you're getting a 5K account from CTI. You're also going to get a month's free trial on this terminal. For anyone that didn't win that race, but they did enter, you can go to the Macro Markets Group website and do a 7-day free trial. Here's the homepage. Obviously, you get a macro briefing every day with an Asian session summary, EU session summary, and events for the day. And if you click into that, it will obviously take you through and show you all of the details. Also on the homepage, you've got all of the recent news. So you can see this is all the news that obviously come out about half an hour ago from the US. And you've also got the squawk. So at the start of the call, if you was on there, you would have heard the news being called out live. So as soon as the weekly jobless claims data come out, it said, weekly jobless 215K versus the 225K that was expected. You get the weekly outlook every week with a weekly recap from obviously the previous week and a weekly outlook for the week ahead. You've got your economic calendar, earnings calendar, and here's the live headlines and scoop that I mentioned. So you press play, connects to your speakers, and any news or data or any key headlines are obviously called out, and any key data will pop up in red on the feed. You've also got the news feed, which updates every few minutes, taking news and headlines from all of the top financial news providers to give you analysis and information and headlines and updates on the market. And then there's quite a few trading tools down the side. You've got Macro GPT, like your chat GPT, but you ask a question, it takes any data from this platform and gives you an answer to whatever question you're asking. There's your trading view charts. You've got currency strength on the day, market heat map, obviously for when the stock market's open, technical analysis tools. There's the daily risk sentiment tool, which is probably one of my favorite, and obviously takes all of the headlines from the day and gives you a bit of an idea on what the sentiment is within the market. There's interest rate expectations to update every week and give you a bit of a clue on what's happening globally. Currency converters, position size calculators, and much more. We've got all of the webinars that our team do and that Mandela do in the webinar section as well, and quite a few more things. So whoever obviously won Waris Armadi, get in contact with us. You're going to get a month's free on this platform to help your trading, whether it's educational or tools or strategies, whatever you find most useful from the platform, and hopefully it will help you hit target and get paid out with City Traders Imperium. And like I mentioned, for anyone that obviously unfortunately didn't win the duck race, they can do a 7-day trial on this platform if they like the look of it and want to use it as well.
I think we've just gotten a very interesting comment here from, I think this was Joseph. So it looks like macro markets needs to get a duck in the race for next week, I think. That's tomorrow. We can start it effective immediately. Get that sorted. So that platform is phenomenal. I love the just the ease of it. You can get everything on one device. I like to have it usually on the tablet, and I love the live squawk. I love it's just comprehensive. Everything is one-stop shop for everything that you need. So really going to enjoy that. I'm sure Waris is still cruising down the Thames on their way to collect their terminal and also their CTI account. James, I think that's it from me. I do want to just let everybody know before we finish up, we are going to be doing a live trading session in about 20 minutes or so. So hop over to our other link on the home page. We're going to trade this post MU earnings day. So if you're interested, please have a look there. What about if people want to find out any more about you? Any suggestions, James?
Head to the website, macromarketsgroup.com, or follow us on Instagram, Macro Markets Group. Either way, through that, you'll be able to get in touch with us and obviously find out some more. But I would just say for the US session ahead, obviously after that data that we got at 1:30, obviously we're seeing the dollar slightly lower, and I think really what the market will kind of want, as I've mentioned, like over the next couple of months or few months, is a kind of sign for a sigh of relief, and that prices won't accelerate anymore. If prices start to fall and inflation starts to come back down, maybe, just maybe, the Fed won't raise rates in September and they'll leave them unchanged. And obviously if that happens, you'll see the dollar unwind and come lower, and it would support the stock market. Now that hasn't happened yet, obviously, as I've spoken about on this call. As it stands, the Fed are going to be raising rates in September, and that's good for the dollar, but in the grand scheme of things, not great for the stock market. And maybe we don't see a rally as hard over the next couple of months as we have seen in the 2 previous months that we've just had, April and May. But we will obviously see off the back of that. But I would just say for the US Open, really there's 2 things to do. Number 1 is join Mandela's live stream and learn more about obviously his open range breakout strategy at the market open. And then number 2, I would just say keep an eye on tech, Nasdaq, and obviously on Micron.
Yes, that's what it's all about. And also, finally, I guess, thank you to everybody who has been watching. We've had quite a few messages throughout the workshop this morning. So just a special thank you to everybody who is with us. Looks like quite a lot of people watching us live. So we'll be back. We do these each and every Thursday and Friday, and we get James every time we can when he's not traveling around the world. to various places.
That's from the man who's sitting in Bermuda in what looks like a very nice garden versus the man who's sitting at the office with a fan. You can't see it. Here's my right hand. There's about a fan just here. If there was like a camera showing between me and Mandela now, you'd see a big fan blowing onto my head because it's about 35 degrees and I feel like I'm sat in a sweat chamber. So, you know, but Mandela says, oh, this is the guy that travels the world, but he wasn't doing a live stream when he was sitting in business class flying over to Bermuda, was he?
Okay, I think on that note, I think, look, we all try to get away from the heat in our own special way, James. But it's always a pleasure having you on. I like the banter. I like the information. And if you want more from us, you know where to find us, everybody. Thanks again. Thanks, James. Thanks for your time.
Enjoy your Thursday, everyone. Good luck. And thank you, Mandela, for having me on.
Cheers. Take care, everybody.